If you run a financial planning practice in Australia, your business has a financial profile that lenders often undervalue at first glance. Your revenue is recurring, your clients have long relationships with your practice, and the funds under management or advice attached to your client book represent a significant and defensible asset. The challenge is that traditional lenders do not always know how to assess a professional services practice, particularly one where the primary asset is the client relationship rather than a physical property or piece of equipment. Here is what is available to financial planning practices, how it works, and what you can realistically borrow. Financial planning practices benefit most from lenders who understand professional services and recurring revenue businesses. Your income is relatively predictable once your client base is established. Your operational costs are primarily staff and compliance rather than stock or equipment, and the value of your practice is substantially driven by your funds under management or advice revenue. Lenders who understand this model assess applications very differently from those who look only at your bank balance and tangible assets. Unsecured business loans provide fast access to working capital for technology investment, compliance costs, hiring additional planners or support staff, marketing to grow your client base, or bridging cash flow during a period of transition or growth. You can borrow between $10,000 and $500,000 based on your practice revenue and bank statements, with approval possible in 24 to 48 hours. Practice acquisition finance is worth understanding if you are looking to purchase another financial planning practice or acquire a client book. The recurring revenue nature of financial planning practices makes them attractive to specialist lenders who will factor in the quality and longevity of the client relationships being acquired. Structured correctly, practice acquisition finance can be serviced from the income generated by the acquired book from day one. A business line of credit works well for financial planning practices managing irregular cash flow, particularly those with fee-for-service revenue that comes in at different points throughout the year, or practices managing the transition between old and new revenue models. You draw what you need, repay as revenue builds, and only pay interest on what you are using. For larger borrowing requirements, significant practice acquisitions, buying into a partnership, or major technology platform investments, secure business loans using property as collateral, provide access to larger facilities at lower interest rates. How much you can borrow depends on your practice revenue, funds under management or advice, and trading history. Practices with strong recurring revenue streams and clean financials access competitive terms. Professional services specialist lenders will take a more nuanced view of your practice value than generalist lenders. Applications take under 20 minutes online for most non-bank and specialist lenders. A commercial finance broker familiar with professional services businesses can identify the right lenders for your practice profile. Brokers are paid by the lender on settlement. Use the free business loan finder at Reliable Business Tools to find which loan type suits your financial planning practice. 6 questions, a clear recommendation, no credit check, and no obligation.